All right, good morning. This is Axel Merk, President and Chief Investment Officer of Merck Investments with a morning update. Markets up right now. That's the equity markets. We're currently up 47 points on the S&P futures. Bonds are also stronger. 10-year up 8 ticks, the 30-year up 16 ticks. This morning we had GDP numbers out. They were bad, obviously, as expected. The forecasters, the professional forecasters, had a very wide range. The one takeaway is that there are quite likely going to be significant downward revision. That's based on the folks that I follow that dig into these numbers. They say that, well, if those underlying things are weak, that usually means that there are going to be some downward revisions, and then so. But I mean, what else is new? We know things are bad. The market around 8:30 Eastern time did jump higher, and some people say it was the GDP numbers. A lot of people attributed it to the study results of Gilead. That's one vaccine that's being tested. As I mentioned, Gilead is a publicly traded company, and we're not making any investment recommendation here. Indeed, let me make a skeptical comment. I try to read the kind of the headlines, and by all means, I'm not a medical doctor, and so take this with a grain of salt. But one of the things that I think the market really got excited about is that it says there are those who received the treatment earlier had better results, and thereby suggesting maybe there's an effectiveness. Now, if I just look at, but other than that, it said, well, those who got it for 5 days versus 10 years was much of a difference. Well, if you receive the treatment earlier, odds are you came to the hospital earlier, and you got other medical treatment also earlier. So to me, just reading through this, I am not convinced yet that this is going to be the cure for all. Now, that said, I don't want to poo-poo this. There will be some drug that is going to be effective, and if it's not this one, it's going to be some other one. And so, having the glass half full attitude is obviously is as good as any, right? So I'm not saying the market must not rally on possibly good news. This was also just a what's called a single arm study, so there was no A/B testing done. And so this is a very early stage, and so there's a lot more research needs to be done, I guess, as the academics and researchers would say. Today is Fed Day, and the Fed really is not going to do much. I don't. It's at least that's not expected. It will be relevant what they say, um, and on the one hand, they really need to keep supporting these markets because a lot of the rally is presumably due to what the Fed has done, kind of being the lender of first resort type of thing. At the same time, because of this amazing rally we've had, this is I think, the biggest rally we've ever had of the lows in such a short period. They might just say, all right, if the market is doing so great, we can withdraw some of the accommodation. Or not, they're not going to say withdraw accommodation, but we can take a little easier. And indeed, they have been buying less on each day. The Fed used to buy 10, 15 billion a month, and now they do this a day, right? So um, who knows? If a question is asked and they say, oh yeah, things are great, we can slow things down, the market might take this negatively. So there's really almost a downside here. Powell quite likely is going to reiterate what he said before, saying that the these accommodations will only be removed very slowly, and even if that's not the case at the tail end of things, that's at least a message that's going to be relayed. And I say the reason that may not be the case is that obviously, who knows what's going to happen in a year or two, right? And so, who whatever this may be. Other than that, it's political season. A lot of piling in on China, holding them quote unquote accountable and whatnot. I don't know whether that does any good for the way forward here, but that's what people like to hear. That's what gets them rallied up, and that's what hopefully, in the views of those who say the things, gets them to go to the polls and then vote for their preferred candidate. Um, doesn't change much of the substance. The strongest currency is the Kiwi today, followed by the Australian dollar. Australia had higher than expected CPI numbers. Now, a few things. the consumption basket is not the same as it was before, and then the CPI in most countries is supposed to reflect the basket that's being consumed, right? And so it's just not possible to adjust it quickly enough. But food prices soared in Australia. There was significant hoarding going on, and so that is part of that. And then another political things, as everybody's aware, governments have been writing big checks, but now as kind of the immediacy of this crisis is kind of moving to a new phase, politics are coming back in. So in Germany, for example, Lufthansa, again, no investment recommendation here, might get government support. And so several groups are suggesting, well, we got to attach some strings. In particular, we want them to be a greener airline. And how about they do phase out all domestic flying by 2030, because flying is also bad. And so I'm not saying that one can't do more on emissions and whatnot, but the point is that money will come with strings attached going forward. And so companies will have to think long and hard on whether they want to take them. And conversely, of course, when you attach strings, just from a pure economic and profitability point of view, that may have implications. And so we'll have to see. And then also, of course, in the U.S., the talk had been whether government should take stakes in these companies if they provide help. Other than that, I see a big long green bar here, and that is West Texas on my screen. West Texas crude is up 25%. I think that's a huge move. It's up $3 at $15.36. So we're still at very low level. Brent crude is at 22.73. That's up 11%. And so, but clearly a rebound, and so the commodity currencies are doing fine. The Norwegian kroner is also higher. It's in the upper quartile there. The strongest emerging market currency I see on my board is the South African rand. It's up 2.1%, and so the Brazilian real is also strong. So you see a bit of a rebound. Talking about which, there's been a lot of talk about that in this recovery, it's the companies that went into the recession that also were the leaders, are now the leaders as well. More typically in a recession, you have a new sort of leadership. You have excesses, and then the Nifty 50 or whatever it may be, they get out of favor, and then the value companies soar. And of course, what's different here is that the economy hit a wall. It wasn't really a structural change. Now, there might be structural changes going forward based on our habits, but because technology had been leading, if anything, I would guess that technology is going to play a bigger role. Now, again, there's not an investment recommendation. Some of the big companies had their earnings. Many of these have an advertising business model, and that may well be depressed. So I wouldn't jump to conclusions here necessarily, but at the same time, sure, if you are technology driven, you may well have an edge here in what's coming out, and so that's why we may not see as much of a shift. Now, that said, I believe yesterday it was the first time where you kind of had this reversal, where the smaller companies and the companies that had been lagging were catching up. And so, of course, what people are wondering is there the beginning of a new trend. And nowadays you can invest in a market cap, you can invest in market equal, you can invest in reverse market cap, where you invest in a basket where the smallest players have the biggest weight in an index that's created. Again, this is not investment advice, but obviously people are pondering about these ideas about what should happen, right? Where you should see that the laggards are covering, but this is of course no situation we've ever been in, and so anybody who tells you that this or that is going to happen, well, they don't have a crystal ball. They might want to get airtime or might want to pitch a product, and that doesn't mean what they're saying is wrong, but it means that we are all pretty much here cooking with salt here. Don't quite know what's happening. Gold is at 1705 on the spot market, down 260. The futures are 1718, down $4, and so that's been hovering around this level. And similarly, it's impossible to tell where this is going to lead. On the one hand, we're going to print an awful lot of money, but if the economy does pick up, yields might be rising in treasuries, and that might be a headwind to gold. And so we had, I believe, yesterday for the first time, some net outflows out of some of the gold ETFs, whereas it had been, and that was 2 days ago. Yesterday there was some inflows again. Before that, 25 days of inflows, a record period. And so there are a lot of people, obviously, that try to diversify into something like gold. Again, not investment recommendation, but just observing that because people are scratching their head as to why is it that equity markets have gone up so much, and obviously part of it is because of this amazing fiscal and monetary stimulus, but that doesn't mean things can't come back down, right? And so be careful out there when you invest. Let me just see. I've been mentioning the 3-month LIBOR rate for those who've been keeping track. That's at 84 basis points, so a slight improvement there. It's coming lower a little bit. 3-month treasuries are at 10 basis points right now, and effective Fed funds rate is at 4 basis points. And I believe I'll leave it at that for now. Have a great day and talk to you soon. Take care. Bye bye.